Hello, I hope you all had a wonderful weekend and welcome to another edition of the Technical Market Update. As I said, I hope your weekend was fairly good and you enjoyed your weekend and did whatever you like to do on your weekend. Uh, on Saturday, I watched a a a movie slash documentary called Grizzly Man. It was about this person who spent his summers in Alaska living with the bears, and he will film his life with the bears. He would go up and touch the bears and basically live amongst the bears. The long and short of it is, after about 13 years of doing this, he was eaten by one of the bears, and that story brought to my mind the fact of using stop losses and risk management. And you have some folks out there that don't use adequate stop losses and risk too much per trade, and may go on a string of successes in the market, but eventually, if they risk too much after a string of losses, then they end up blowing their account. So just remember, when you're trading, you risk small amounts. If you're risking 5%, 10%, 15% of your equity on any one trade, you are just risking way too much, and you may go on a string of wins, just like Mr. Grizzly Man. Took him 13 years, but eventually he was eaten by one of the bears. Okay, so do not get eaten by one of the bears. I just thought that was just a bit interesting. Okay, so looking at the market, the technical picture, we are still in a triangular consolidation here on the euro, and the triangle is clearly delineated here, and the market is just meandering in this triangle, not doing really much. It's up one day, it's down one day. On the day so far, the euro is down slightly against the US dollar, and what we're looking for is a breakout of this consolidation pattern. So we're going to be looking this week to see if the market does break out. And if it does break out, it will offer some excellent opportunities for profits in the markets. That's why I always say, when you're trading and you're in a consolidation, the breakout will come, and that's where a lot of opportunities will come about. Okay, so support in the euro is currently at 106, or let me just get on the 4-hour chart. It's at 105.50, and also the low that was made, and that is 104.51. So 105.50 and 104.51, those are the support areas. And resistance is up at 110 and 110.52. Okay, taking a look at the Australian dollar, and we're in a consolidation on the Australian dollar also. But look what happened this morning. The market briefly broke above this trend line here, but collapsed right down after. And that's what we call a false breakout. And that's why when you have your triangles on the daily chart, to ensure that you get a clean break, you have to close above the triangle on the daily chart, and not really on the 4-hour charts. So that's very important. Look for closes on the daily chart when you draw your triangle on the daily chart. So that will not eliminate false breakouts, but it will certainly reduce the number of false breakouts that you may receive. Okay, so we're looking at support on the Australian dollar in the 76.50 area, and a resistance up at this high here at 79.38. Okay, another market of interest is the British pound, where let me just delete this line here. We're not really in a triangular consolidation, but last week on the weekly chart, we had what we call railroad tracks, the candlestick pattern, and that can signal a bottom. I'm not saying it is signaling a bottom, but it could prelude for strength in the British pound. And to be sure, we just have to wait and see. So we want to see if the market is going to get bullish. We want to see the market take out this swing high near the 152 level. I would then have more confidence that pattern is playing out if we take out the 152 level. Support is currently at 146, and if we get a daily close below 146, that could lead to further selling in the British pound. So that is something you definitely should look out for. Looking at the euro versus the Japanese yen, the market did break out of this triangular consolidation and looks like it may come and retest the breakout point. Remember, rule of technical analysis that once a market breaks down, what sometimes happens is that the market will come and retest the breakout point before heading downwards. Now, this is not set in stone, but that's what often occurs when you get a breakout. So that's what we're going to look for in the euro yen. Looking at the forward chart of the euro yen, we see that point is all the way up at 129.50. So if the market is really going to test this breakout point, it will have to rally up to around the 129.50 level. Looking at the Japanese yen, this is also so far another false break on the 4-hour chart. We see that the market closed below the triangle on the 4-hour chart, but has since rebounded. And as I said, that's why for a clean breakout, you want to see a close on the daily chart on the Japanese yen. Okay, so that's essentially what I'm seeing for the Forex markets. Remember, it's a new week, so we're going to look for our signals and we're going to trade our signals. Remember, we trade our plan and stick to our trading plan. If you like these signals sent to your trading account, what you could do is sign up on the link below. That price on the link below is a discounted price, and you can sign up and have the signals sent directly to your trading account. The trading account is carefully managed. We don't risk more than 2 to 3% per trade, and our typical trade is about 1.5% risk, but we can make large gains in the account because we are attempting to capture large pip movements in the market. So we keep our risk small and look for larger trends that do occur in the market. So you can click on the link below to sign up, and I will see you again, and I hope you have a wonderful trading week. Thank you.